Hello there. I hope you're doing well. Timmy Edge FX here, and I'm here to explain the trade analysis that actually made me to pass my $50,000 account with Ghost Funded, the buy now pay later. So sit back as I show you how I did. So I started on the daily time frame, right? It was around here, around here that I got the trade, right? So on the weekly time frame, what I do is I look for no, I try to like get the market structure right, yeah. So I try to get the market structure, the volume, the order flow, where price is going, the overall market structure, right? That is the common thing that every trader is meant to do at first, right? We look at okay, where's the trend currently and the overall trend, and that's just something that I discovered for myself. I look at the current trend and the overall trend, right? For example, now if you notice, starting from here, the trend has been bearish, right? But if you look at this day here, right, if you look at this specific candle on the third, right, on the 3rd of July, that day was actually going bullish. It was a pullback, right? So that is the current trend, but the overall trend was actually bearish, right? So these are the things I keep in mind. Okay, what is the current trend and what's the overall trend, right? And the beauty is that you want to keep yourself in the position of the overall trend. If trend is bearish, so you want to keep yourself in the bearish trend, and that doesn't mean you can't even make profits on the what counter trend, right? You can also make profit on the counter trend, but you want to make sure that you are in alignment with the overall trend, right? So when I see that the market here, the first bullish candle here, when I said that it went bullish, right? I knew that okay, it was a pullback. The next thing I asked myself, the overall sell, the overall sell candle on the daily buyers, I'm still on the daily buyers. You see how I'm sitting tight and analyzing the daily buyers. So I asked myself, where is the maximum that the price is likely to go to? We want to buy at discount and we want to sell at premium. So where's the premium? Number one, number two, where is the dealing range of the sell? Like where is the maximum level that the market will buy to before selling, right? So I looked at it and I was like, okay, this is the other block here, right? There's another block here. This is a bearish order block, right? Okay, let me make the chart cleaner. Okay, exactly. So now the chart is cleaner, right? If you look at it, you'll see even with the overall market structure, you literally s- you literally see that this was a microstructure shift, right? This was a microstructure shift. And if you're familiar with ICT market structure, you will notice that they always say that anytime price breaks lower from a microstructure shift, which is either a mitigation block, right, or a which is either a mitigation block. As you can see, this one, this is actually a breaker block, right? How do I know this is a breaker block? Why? Because this happened, this happened. Okay, let me get that again. Just give me a minute. Because this happened here, 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 then here, right? So this is a breaker block, right? And if you notice, that is what happened here. That is what happened here. That is what happened here, right? So So because of that, what we make reference to after a breaker block is what price is likely to come to the neckline, right? Price is likely to come to the neckline. And what do you see? That is what we see happening here, right? That is what we see happening here. This is the neckline, right? Price broke down. Then what are you expecting? Price to come back to the neckline, right? Exactly. That is what we are expecting on the daily time frame. Can you see how we are breaking down the market structure, right? And I hope you're understanding. what I'm saying. Okay, so so everything is clear, right? After this neckline got broken or taken out, it caused a microstructure shift on the daily time frame, and we're expecting price to come back to the neckline most likely, right? And then what do you expect in the approachment pattern of that? In price coming back to the neckline, you want price to most likely create something like an inducement approach pattern towards that level. That liquidity inducement is what is going to confirm that the trend wants to go bearish. And where is that? We find that here, right? We find that here. So if you notice, that level I drew now is the inducement for price to come back up to this upper order block here. And this other block here is not just an ordinary order block. Why? Because it took out an old previous high, right? Causing it to become what? A rejection block, right? And what is the key structure to noticing a market want to you want to notice a market structure shift? What do you do? Or how do you spot that? You spot that through things like number one, declaring of an old high, right? Or an old low, right? And if you look at this one, market started here with a break of structure, right? This is a break of structure. So the market has been clear that the market has been clear that it has wanted to go lower if you were paying attention to the long-term structure, right? So people that were informed already knew that the market is going to sell soon because no, I'll call that a change of character, right? I'll call that a change of character, right? I'll call that a change of character. But the reason why I won't call that a change of character is because of the fact that I want price to have broken at least two market structures, right? This was the only structure price broke. I will call this a change of character, right? Because it's closed by a candle close, right? But I can't see enough structures to tell me that okay, this is a change of character, right? So what the next thing I noticed was that price actually, right? Price actually, if you notice this first candle here on the 9th of July, right? The candle swept back into the range, did not close. It was the next candle that closed outside it, right? So I can't see enough proof that there's enough pressure on the sell, right? Exactly. And we can see that price came back into a fair value gap here, right? We can see that price came back into a fair value gap here, right? And guess what? Price came back into the last the third quadrant of that fair value gap, right? If you check it, that's like the 70%, right, of the whole fair value gap range, right? So price came into serious discounts, right, of that fair value gap before price kept going higher, and that is something that you should also take note of, right? So me knowing that price, on this night of June candle on Tuesday, me knowing that price swept back into the range of this change of character, I already suspect that the market is going to buy, right? Especially it's using the 70% quarter of that my gun box, right? It has already given me a much clear sign that price is likely going bullish. Then I wait for confirmation and stuff like that. But eventually that does not change the what the market is currently doing, right? Because this was an initial break of structure, right? This is an initial break of structure, right? And this was the low that caused the break of structure. So price can still use that to sell, right? And after that happened, you notice that where's the dealing range? After the market has done a change of character, right? You want to mark the dealing range high and the dealing range low here, right? Dealing range high and the dealing range low and the dealing range low here, right? Of the change of character dealing range, right? So what do you want to do next? You want to look at it like this. You want to draw your gun box again, right? Where is price likely to pull back to? Now, the problem about people using Fibonacci is when you want to use a Fibonacci and you want to like get a pullback, like where price is likely to pull back to, what you want to do is that you want to, you are expecting price to pull back to at least the 62%, the 70%, 70%, the 0.82%, I think ICT sweet spot is the 0.70%. Those levels are invalid when there is no key level to tag them with, right? So if you look at it here, the 50%, and note this, when price wants to make a structure, when price wants to pull back, price always uses the 50% first to create a fake pullback. That fake pullback will eventually turn into an inducement. Okay, so this is what I'm talking about here. This is the 50% of this range here, as you can see, the green line. And what did you say price doing, right? Let me show you what price did here. So price, give me a minute, give me a minute. So what you see price doing here is that what you see price doing here is that after this break of structure, right? Price pulled back. This is the 50% here, right? Now I want you to study that level there. You see that candle that you'll see that candle there, right? That went to the 50%, pulled back to the 50% and came back lower, right? So you can see this candle here. This was the pullback after the change of character, right? And another situation price can do is that price could have arranged the liquidity before the change of character. As you can see that here, when price came back, when price created something like a change of character here, right? Price had already formed a pullback, a kind of likely pullback here, then came back lower, right? Inside it, price has already created an inducement there, right? So this was the inducement, right? To trick people that the market wants to sell already. Because you can also see another kind of microstructure shift around there, right? If you notice. So price pulled back up to this level, price pulled back up to this level, and price dropped. You'll notice that level price rejected from was the 50% level at first, right? So people would have thought that okay, let's sell, but no, that's not the level, right? There is no key level at the 50%, as you can see, right? No key level at the 50%. Like nothing to recall to, no other block around here, nothing to recall price to, right? The only strong key level you can see is this one, this other block here, right? And that is above the maximum level of the dealing range, right? Exactly. So we could not use the Fibonacci at that time because there is no key level to pair the Fibonacci with, right? The only thing we can do is to spot price extreme, right? Is to spot price extreme, right? Extreme key level, which was here. So that's the extreme order block, right? And what do you see price doing? Price had already created an inducement here, right? So that's the inducement there. Then what do you want to see next? You want to see price action around that key level, right? You want to see price reaction around this key level, which was what happened here, right? So what is one of the first elements to noticing a market structure shift? Price will create a mitigation block or a breaker block, right? So after price created a mitigation block or a breaker block, the next thing you want to do is you want price to break the neckline, right? And where is the neckline? Price broke it here. After price broke the neckline, you want price to pull back to that neckline and create something like an inducement in pulling back, which you can say that this was the inducement price created, right? In pulling back to this what rejection block. Why is this a rejection block? It swept an old high, then revert back into the range, right? That is how to spot a rejection block, right? And what happened next? What happened next was that we already know that this level is a very, very valid level to expect a sell from after a microstructure shift here, right? And we can see how price created an inducement around here, which makes this an even more A-level setup. Then price came here and then what displays and then displays lower here, right? So after price displays lower here, what is the next thing we are expecting? And then the next day here, I saw price pulling back, right? After price pulled back, this was, I asked myself, where is the dealing range? Where is the extreme that price is going to go to before likely beginning the sell? The thing is, you don't have to get the exact point, but you just have to note your dealing range. So what I noticed was that this is my dealing range from here, right? Let me get this out. 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 So this is my dealing range from here, right? And to here. So when price was pulling back, I knew that price extreme would be, the maximum would be this high, right? This high, right? So there's something called volume imbalance, right? Which I would likely talk about in the later video. But what you notice here is that this level here is a key level aligned. This level here is a key level aligned with this what other block, which makes this an even A level setup, an even more A level setup, right? So if you notice now, you'll notice that this level here, this was where I took the sell from. So I knew that price will not, this is the dealing range for price. Price will not cross this level, right? So I went to the 4-hour time frame, putting that dealing range in mind. What did I find out next? I found out that this level here was an inducement, right? What else again? I also noticed that this is a microstructure shift, right? And what the price leave there, price displaced lower, as you can see, price displaced lower, as you can see. So I'm expecting price to pull back towards a key level order block here, right? And this is the key level order block, right? Why is it a valid order block? It has taken inducement, right? This is the inducement price took, as you can see. And as you can see, this gun box here is the daily range I mapped out on the daily time frame that price would not be able to clear, right? So let me get that out. So I knew that this is the dealing range on the daily time frame that price wouldn't clear. And I know that I found my order block to be this one, to be this candle, because it has taken what inducement, right? So the next thing I did was that I mapped the other block out, right? Because that's the next best thing to do. Map out the other block. So I mapped out the other block, right? And here is the other block, right? So as I mapped out that other block, I'm like, okay, I'm expecting price to come there, but price wouldn't clear the eye of that other block. And this is the dealing range of the other block, right? So that's the dealing range of that other block, right? And as you can see, price did not even pull back to the 50% quadrant, right? So in order not to lose trade, Okay, let me just keep on going. Then I went to the 1 hour time frame, right? I went to the 1 hour time frame. And what did I do next? I tried to confirm every liquidity I saw on the 4 hour time frame, which was especially this candle. I checked, was the other block thick enough? Yes, it was thick enough. It was thick enough, right? So what do I do next? I try to set an order block using this level, right? Using that same level, using this same order block level, then my stop loss was around here, right? Then I pushed price lower, right? If you want to make it more refined, you can shift your TP level to this level here, right? To this level here, to the last upper quadrant of that candle, right? Which will give you a cleaner 1 to 3, right? And after that, the next thing you can do is that you spot in the approachment pattern to this overall order block here. You can spot this liquidity here, right? Then the next thing you can do is that you wait for price. I told you that after price has gone to a key level, you want to expect like a mitigation block or a breaker block around that level, right? And you can see this. Then this was the other block here, right? The neckline, I mean, right? So you can put your limit order short here at the neckline, put your stop loss at the high here, and then take the sell as your second entry, right? You can take that as your second entry because that's also valid, right? And then price goes on like that, right? Price goes on like that, and then that was how I was able to spot my. That was I was able to spot my entry because if I had not entered on that level, I wouldn't have entered at all because the entry would have been missed, especially how they positioned London, London entry. As you can see, where's London? So this was London session around here. This was London session around here. So I would have already missed the move if I didn't wait for price to come, if I didn't use my limit order to enter from here, right? I would have missed the move. And that is how a lot of people miss move. So that was how I was able to pass my 50K account of gold funded, and that's it, right? That's it. So I hope you enjoyed the video. Don't forget to like, don't forget to subscribe, don't forget to share, right? Don't forget to comment, right? Thank you so much, love. Take care. Bye bye.